The busy summer home buying season is coming to a close, and what a summer it has been. Hardly a day goes by without some news dropping of a new record in the housing market, whether it's housing prices or days on market or inventory levels. But things may be starting to shift. There is a lot of data that is suggesting that we may be on our way to a more normal housing market. So today we're going to talk about what has been going on in the housing market over the last several weeks and what to watch for in September. What's going on, everyone? This is Dave Meyer, Vice President of Data and Analytics and BiggerPockets, and I am also a longtime real estate investor. And today I've got a ton of interesting data to share with you, and of course I will provide some of my own interpretations of that data and my thoughts on the housing market as we wind down the summer. But before I jump in, I ask that you give this video a thumbs up, and I also want to share something that I am really excited about. This coming week on September 7th, I am going to be co-hosting the BiggerPockets podcast with David Green and a special guest to talk about the housing market, what's going on in the rental market, and other important economic news. So make sure to check that out on September 7th on the BiggerPockets podcast. With that out of the way, let's get into what is going on in the housing market as we head into September of 2021. The short answer is that things are still insane. But things are starting to become ever so slightly less insane, which, at least in my view, is a pretty good thing. Let's start off by looking at a couple of stats. The median home price for the 4-week period ending August 22nd was just over $361,000, according to Redfin, which is a 16% increase over the same period last year and, of course, is a new record. Now, in a normal year, a 16% year-over-year gain would be unheard of. But we all know this is anything but a normal year. In July, just a couple of weeks ago, home prices were up 22% year over year, according to the exact same measurement. So seeing a 16% increase is actually a sign that the housing market is no longer on as insane of a run, and perhaps it has even peaked, at least in terms of year-over-year growth. Now, to be clear, I'm not saying that housing prices have peaked or that they are going to go down. I am just saying that the days of 20% year-over-year growth rates may be behind us. And it's not just a slowing of year-over-year price that's going on. There is a bunch of other evidence in recent data dumps that indicate the housing market madness is starting to slow down. For example, let's talk about inventory. If you've been following my videos or anything about the housing market this year, you know that inventory has been down in a dramatic way in 2021. Let's put it another way. There just haven't been very many houses on the market this year. And when there are not a lot of houses put up for sale, which in economic terms would be known as low supply, prices tend to go up. Inventory, just to be clear, is still super low in historic terms, but it's not going down, and it's actually starting to come back up. And it's crawling up. It's really not going very quickly, but at least it's starting to head in the right direction. Now, there are a lot of ways to measure inventory, but let's look at a few of the most popular methods, and the first is total inventory, which is defined as the number of active listings on the last day of the month. And that went from 791 grand in June to 623,000 in July, an increase of 4%. That's not groundbreaking, but 4% month over month growth is actually pretty good. And again, it is a step in the right direction, whereas for months we were going in the opposite direction. Another popular way to measure inventory, at least the heat of the housing market, is days on market. And that is basically how many days on average does it take for a property to have an accepted offer. And we are now up to 15 whole days. This is still absolutely ridiculous, seeing as before the pandemic, the average days on market was about 40 to 50 days, depending on seasonality. But we were at 14 days back in June, so seeing this up to 15 is trending in the right direction and is another good step. Got to be an optimist, right? As a result, we are seeing the total number of home sales gradually increase. In July, home sales reached an annualized level of 6 million homes per year, which is up 2% over June and up a similar amount over July of 2020. And if you're like me and you're hoping for the housing market to return to more normal levels of growth, then more home sales is a very good sign. So that's where we are today. Prices are continuing to set new records, but some of the lead indicators of the housing market, such as days on market, total inventory, and total home sales, are starting to trend in a more normal direction. But we all want to know what happens from here. And well, I sure wish I could tell you for certain, but what I can do is offer my best opinion, and that is that the housing market will continue to see outsized year-over-year growth data through the end of the year, but the pace at which the median home price is increasing will start to slow down at a modest pace. And let me explain a little bit why I'm saying this and why this is my forecast of what's going to happen over the next couple of months. Well, first and foremost is inventory. As I mentioned, it is starting to recover a bit, but I don't think there is going to be a serious increase in inventory anytime in the near future. I've made a couple of videos about this that you should check out if you're curious, but I just don't see that there's going to be a foreclosure crisis where this huge glut of supply comes on because of foreclosures. And secondly, with housing prices so wild, I think homeowners are basically just wary of selling their homes because they don't want to have to buy back into this crazy market. And the last thing I'll say about inventory, and it's something we talked about a few weeks ago, but there has been a massive underbuilding problem in the US for more than a decade. So it's not like home builders or new homes coming online are going to come save us right now. So while I do think inventory will gradually return to more normal levels, I personally am not expecting it to happen anytime soon. So while I do think inventory will gradually return to more normal levels, I don't think it's going to happen quickly. And as a result, I think the upward pressure that low inventory is putting on housing prices is going to continue, but start to abate over the next couple months and gradually come back down to earth. The next reason I believe the housing market will continue to grow, but the growth rate will start to decline is interest rates. And now interest rates, along with inventory, are of course one of the biggest reasons we've seen housing prices soar over the last year. Low rates means people can afford more expensive houses, and rates are just about as low as they have ever been. At the beginning of the year, it was looking like rates were going to climb, but they actually peaked around April, and since then, the 30-year fixed rate mortgage rate has hovered around 3%, and recently it's actually been lower at something like 2.85 or 2.9%. Now, because inflation data has been trending upward, there has been talk that the Fed is going to raise interest rates, but that does not appear to be happening anytime soon. In fact, the Fed has repeatedly stated they do not intend to raise rates in 2021. But as you might know, mortgage rates are not just dependent on the Fed, but are also highly dependent on the bond market. And there is still a chance that rates will rise in 2021, but probably only up to about 3.2 or 3.4% in my mind. Just to be clear, this absolutely will cool the housing market. When interest rates rise, houses become more expensive and it will tamp down growth in the housing market. But again, just like with inventory, I expect this to happen slowly. The Fed has signaled that it is going to be cautious about raising rates, and even when they start, it likely will be a long process that takes years, just like what happened after the Great Recession. So both of these factors, both inventory and interest rates, should start to help cool off the housing market. But on the other hand, demand remains very high. And that, in my mind, is unlikely to change. The major driver of demand right now is millennials. And millennials lag behind other generations on home ownership. And as they start to reach the age of family formation, they seem intent, just like every generation before them, on owning their own home. This long-term and likely stable level of demand is, at least in my opinion, likely to help prop up the housing markets for the next several years. And of course, things could go down for a short period of time and prices could even go down. I personally don't think that will happen, but of course it could happen. But what I'm saying here is that this demand, this strong millennial demand, coupled with the house building shortage over the last several decades, is likely to give tailwinds to price appreciation in the housing market for the next several years to come. So in summary, my opinion about the trajectory of the housing market has not changed significantly since the beginning of summer. What I said back then was that we'd see crazy growth rates over the summer, check, and then start to see the housing market return to more normal levels of growth over the latter half of 2021 and well into 2022. And I just want to make clear that I don't believe the market is going to crash, at least in the next couple of months, because My interpretation of the housing market, the economic and demographic data that comes out suggests that we'll see a gradual return to normal, not a shock to the system. But of course, that is just my interpretation of the data. Things could unfold differently, seeing as I unfortunately cannot see the future. I am just providing to you my best interpretation of the data as I possibly can. As investors, you should stay informed about what is happening in the housing market and form your own opinions about what might happen next and how to adjust your investing strategy accordingly. To that end, I hope this video has been helpful to you and it will help you form your own investment hypothesis while you go out and find and make great deals. For BiggerPockets, I am Dave Meyer, and make sure to check out my segment on the BiggerPockets podcast next week, September 7th, to hear me, David Green, and a special guest debate the state of the housing market and review all sorts of important economic news. For BiggerPockets, my name is Dave Meyer. Thank you all so much for watching, and I'll see you next week.